Remember when everything on-chain was a meme?
Yeah.
Everything.
Well, that meme is becoming a reality. You can now swap your meme coins for tokenized Tesla or Nvidia stock, all backed one for one by real shares without coming in contact with a broker and, in some cases, without KYC. In this video, we'll dive into tokenized stocks, how the worlds of TradFi and crypto are coming closer together, where you can get involved right now, and also the potential risks to be aware of before engaging in this new frontier. My name is Nick, and this is a video you cannot afford to miss. Before we start, a quick heads up. Although we're looking at new financial products today, I am certainly not a financial advisor, and this is not financial advice. We are just sharing information for education and entertainment. So, always do your own research before investing. Now, let's get into it. BlackRock CEO Larry Fink has been telling anyone who will listen, which is pretty much everyone, over the last couple of years, that asset tokenization is the future. But why would we want to tokenize stocks? I mean, who's actually doing this, and how are they doing it? Well, let's first consider for a brief moment how TradFi works under the hood. Traditional equities still largely follow a timetable stamped many decades ago. Trade today, then wait hours or even days while clearinghouses reconcile ledgers and paper certificates sleep in vaults. Put that same share on a blockchain, however, and the clock compresses the process into seconds. And what's more, the rails are open 24/7. And this fixes a structural pain point for anyone who's had a Friday full stuck in a clearing limbo while shocking headlines nuke the markets. So, tokenized stocks can give us a real-time settlement and some vastly improved operational efficiency. What was once an ordeal involving a myriad of middlemen and overlapping systems now becomes much more streamlined and efficient. Not only that, but the access to markets at any given time can also extend to market access in any given place. Because these tokens will be tradable on decentralized exchanges, it offers individuals worldwide access to markets they may not have had otherwise. And what's more, because the share lives as a crypto token, fractional ownership is also coming as a standard feature by design. Own 0.33 of a tokenized Tesla stock instead of the whole unit, or drop that fraction into a DeFi lending market as collateral. So, who's bringing this to the market? Well, for the crypto natives, Backed Finance grabbed headlines recently with its newly launched X stocks, now tradable around the clock from anywhere and in any fractional size you want on Solana. Zurich-based Backed Finance is a regulated token issuer operating out of Switzerland, obviously. It keeps the underlying Apple, Tesla, or Nvidia shares with licensed custodians, and then it mints one token per share. Holders can then swap those tokens, confident each represents a fully collateralized share. Each X stock is engineered to mirror its Wall Street twin through a classic peg and arbitrage loop. Backed Finance mints one token only after a regulated custodian locks the matching share, and anyone, typically professional market makers, can swap tokens for the underlying stock or vice versa. When the on-chain price on Bybit drifts from the quote on the New York Stock Exchange, arbitrage desks step in. If XTSLA trades at a discount, they redeem tokens for real Tesla shares until parity returns. If it trades rich, they create new tokens and sell them down. That interplay keeps the secondary 24-hour crypto venue glued to the primary market that opens 9:30 a.m. to 4 p.m. in New York, while off-hours trading effectively becomes something akin to a live prediction market for the next bell. Across the Atlantic, San Francisco startup Denari took a slightly different route. On 26th of June this year, it became the first company to win a US broker-dealer license solely for tokenized equities, clearing the way to mint its own ERC20D shares, each backed one for one by stock held with a US custodian. And of course, we also have retail giant Robinhood joining the fray, recently unveiling more than 200 tokenized US stocks and ETFs on Arbitrum for EU users, with plans to migrate all of those assets onto its own bespoke RHO chain later this year. To be clear, none of these projects share custody stacks or liquidity pools. Instead, they form proof points, to which regulators on both sides of the pond are starting to give a big green light. So, stack those upgrades together and the pitch writes itself. Faster finality, borderless participation, fractionalized ownership as a standard feature, plug-and-play utility, and big players getting involved. Tokenized stocks don't appear to be a side project for crypto or TradFi. They're becoming the new rails that legacy equities have been waiting for. All we've been waiting for is for the rest of you to subscribe. Apparently, 34% of the people who watch these videos are not subscribed. So, if that's you, hit the subscribe button as well as the bell for good measure. And if you're enjoying this video so far, fire up those likes. Back to the vid. So, picture this. Instead of the traditional process that can take hours or days, a Tesla share moves across a blockchain block in a matter of milliseconds, a standard on-chain swap. That near-instant finality is precisely what is happening on Solana with Bakkt Finance's X stocks. The debut list covered over 60 US stocks and ETFs. Every SPL token exists only after Bakkt's Swiss custodians, including Incor Bank and Miauki Baumann, segregate an equal number of real-world shares, keeping the on-chain supply 1-for-1 back. A purpose-built Oracle stack brought to the market by leading Oracle solutions provider Chainlink helps to keep X stocks honest. The architecture publishes proof of reserve attestations that help us verify that every token remains 1-for-1 backed. From a user's perspective, swapping SOL for XTSLA feels no different from exchanging SOL for USDC. Liquidity comes through DEXs such as Radium, so fractionalized slices like 0.03 of tokenized Nvidia stock can change hands at 2 a.m. on a Sunday after a user was convinced by a bullish Nvidia thread on X, for example. You may have noticed a key design choice in that process: the absence of mandatory KYC. This permissionless flow is a bit of a breakthrough for users who want equity exposure without surrendering their privacy, certainly a core feature of the original crypto ethos. And once the tokenized stocks lands in your wallet, the on-chain world opens up. As the market grows, you'll be able to provide liquidity, post as collateral, or simply park those tokenized shares until earnings season. DeFi builders are also expected to start building out more creative use cases for such tokens as the market expands. But let's be real for a moment. With all the new tech, tokens, chains, and protocols popping up daily, navigating DeFi can feel like a bit of a maze. For those looking to simplify things, it's worth checking out Axiom, a trading terminal designed to simplify your on-chain activity. If you're unfamiliar with Axiom, then be sure to check out our tutorial on it right over here. And if you want to start trading right now, then hit this QR code or the link down in the description, which will give you 10% cash back on your trades for life, as well as 2 times points multiplier, which will presumably help you get more of any potential upcoming Axiom airdrop. Now, Bakkt's Solana rollout offers a glimpse of equities upgraded for an always-on self-custody world. Instant settlement, 24-hour access, fractional sizing, and DeFi compostability. No brokerage queue required. But Solana DEXs are not the only places these tokenized stocks are trading. Kraken became the first major exchange to pipe Bakkt's X stocks straight into a spot order book, listing those 60-plus tokenized assets and facilitating withdrawals to on-chain wallets, so users can loop those shares back into Solana DeFi whenever they like. The move flipped a switch for fiat-based traders on CEXs. They can now buy tokenized Apple stock with USD, withdraw that XAAPL to a Phantom, and post it as collateral in DeFi money markets within minutes. No brokerage lockups, no 4 p.m. bell. Bybit followed the same day, rolling out the same suite of X stocks to certain cohorts of its customer base. Bybit's trading guide introduces this new tech as a way to access popular tech stocks outside standard market hours. And this foothold sets the stage for BuyReal, a Solana-based hybrid DEX Bybit is currently test driving with Q3 mainnet target. BuyReal aims to pair central limit order book speed with on-chain finality, effectively giving the exchange an internal bridge between its custodial users and the permissionless X stocks pools. Meanwhile, as mentioned earlier, retail titan Robinhood has thrown its hat into the proverbial ring with an even bigger splash. More than 200 tokenized US stocks and ETFs are now live for EU customers, with plans to migrate these assets to a bespoke RHO chain, a chain they claim will be optimized for real-world assets. Critics once wondered if regulators would ever bless on-chain equities. Now, one of Silicon Valley's largest brokers is issuing them directly. It's also worth noting that Robinhood's tokenized stocks, initially issued on Arbitrum, will only offer 24/5 access until the firm has its own bespoke chain up and running, which will then unlock 24/7 trading and full self-custody. Add Dinari's freshly minted US broker-dealer license to the mix of centralized entities, and the message is clear. Regulated venues on both sides of the Atlantic are not just permitting, but actively courting tokenized equities, and the momentum is only building. Kraken and Bybit are among the first to get involved, along with Gemini, which now offers tokenized MicroStrategy stock for its users. More CEXs are expected to join this list in the coming months, including Coinbase, which is currently seeking SEC approval to offer tokenized equities on its platform. The competition among crypto exchanges to capture this market share is likely to heat up, but for you, it's probably best to cut the noise and check out the Coin Bureau Deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and cashbacks on deposits of up to 75% on the best crypto exchanges around. These deals won't be around for long, so take advantage of them ASAP using this QR code right here or the link down in the description. Now, so far, all of this sounds great, and indeed, much of it is. However, as with any new financial product, there are risks and downsides involved that should not be taken lightly. Tokenized stocks may seem friction-free on the surface, yet the fine print can still give you a bite. Backed Finance's own terms let its contracts block interactions with addresses which have been flagged as sanctioned, and the issuer can pause or burn tokens if court orders parties to do so. Compliance firms like TRM Labs note that exchanges or issuers can act on law enforcement requests to freeze assets linked to flagged wallets, so the on-chain version of a bank lockout. In practice, it appears that your X stock is only as censorship-resistant as the address reputation score behind it. Oracle and Reserve Risk sits next in the queue. Chainlink's Proof of Reserve feed publishes real-time attestations that every token stays one-for-one backed, but the Oracle itself is a single point of failure that may cause issues with the whole process. Now, Chainlink has earned its sterling reputation over the years, facing very few issues and really being the gold standard for oracles in crypto. However, if price feeds were to go dark or proof of reserves were somehow spoofed, DEXs could keep trading on erroneous data. And while Backed advertises a system that ensures its Solana-based tokens are fully backed and secure, no system is immune to data outages, something to which Solana is certainly no stranger, to put it lightly. Then comes liquidity gaps. While volumes for XStock tokens are showing solid growth in their first week, we are, at this stage, still talking about only millions in daily volume. Those figures are of course lunch money next to the billions that churn in the TradFi world every session. Depending on the token issuer and market makers, a surprise headline at midnight could possibly leave sellers staring at nasty spreads that would never appear on a primary exchange. Corporate actions are another rabbit hole entirely. On one side, Dinari promises stablecoin dividends or D shares only to verified wallets and explicitly says its tokens lack voting rights. At the same time, Backed Finance's X stocks merely give economic exposure. In their own final terms, they state, quote, "Each investor's rights as a creditor do not consist of any shareholder's rights, thus excluding all rights of attendance, dividends payments, other participation rights, or voting rights. And if you're counting on yield or voting power, be sure to read the prospectus line by line for the tokenized stock you're choosing to hold." Regulation and geography complicate matters further. For example, Bybit blocks X stocks for users in the EEA, Australia, Japan, the US, and the UK, meaning only KYC cleared residents of places in regions like South America, Africa, and the UAE can trade them. And there is also the issue of insurance blind spots. Unless the issuer is a member of the Securities Investor Protection Corporation, tokenized shares typically sit outside the SIPC coverage, leaving holders on their own if markets get really ugly and broker-dealers implode. A recent compliance FAQ notes that SIPC applies to tokenized securities only under specific conditions. Specifically, quote, the tokenized security must be legally registered with the SEC, meet the definition of a security under federal law, and be held by a broker that belongs to SIPC. Finally, as alluded to earlier, we must remember network risk. Solana has developed a reputation for its tendency to face network issues from time to time. In such a case, of course, your tokenized stocks are in limbo. If the chain stalls again during market turbulence, traders could be locked out precisely when they most need liquidity. Consider these assets together and you get the real-world risk profile for tokenized stocks. Assets that move at crypto speed but can still be frozen, depegged, illiquid, short-changed on dividends, uninsured, or even stuck during a network outage. However, we should note that as TradFi and crypto continue to merge, many of these issues are expected to be ironed out and/or improved as the products and markets develop. We truly are in the early innings here. So treat X stocks as the leap forward for market tech that they are. Just keep one eye on the legal plumbing, the price feeds, and the chain's status page beneath that glossy user interface. But where does all of this go from here? Tokenized stocks feel new, yet they already point to something systemic. McKinsey's base case model puts the value of all tokenized financial assets, or real-world assets, at about $2 trillion by 2030, with a blue sky scenario twice that size. Ripple and Boston Consulting Group are much bolder, projecting an $18.9 trillion by 2033 as bonds, money market funds, and equities migrate on-chain. Those growth curves also seem to steepen every time a regulator opens the door. Simply put, when we have regulatory clarity, it pulls in capital. As we've seen, centralized venues, both TradFi native and crypto-oriented, are scrambling to front-run that flow as excitement builds. Robinhood, Bybit, Kraken, Gemini will soon be joined by competitors looking to carve out a slice of this market. On the crypto-native side, Solana looks like the early liquidity magnet, a fast network that currently averages over 100 million transactions and more than 3 million active addresses per day. Solana is primed to benefit from the growth of these new products. Nasdaq issues see hundreds of billions of dollars in trading volume each trading day, so diverting even a small 1% of that flow onto Solana would be game-changing. Although, of course, Solana is not alone here, and we expect more chains to see tokenized equities boosting volumes in the future. Meanwhile, the product set is also expected to grow. Think customized baskets that rebalance automatically, lending markets that accept those baskets as collateral, and market-neutral funds utilizing such products to borrow USDC without touching a prime broker. Behind the scenes, projects such as Wormhole are building permissioned lanes that enable cross-chain transfers and interoperability. We could see a future where Robinhood's Arbitrum pool and Bakkt's Solana pool can arbitrage each other like two arms on the same global exchange. But I digress, and it's important to remember that nothing is guaranteed. The risks and downsides are certainly also there, as we've discussed. However, we should reiterate that these are the early days for tokenized stocks, and they are part of what is arguably crypto's most important and promising sector in terms of growth, namely RWAs or real-world assets. The direction of travel is hard to miss. A decade ago, everything on-chain was a meme. Now, we have massive institutions worldwide stumbling over each other to ensure these memes do not remain dreams. If the likes of Bakkt and Denari are version 1.0, version 2.0 will feel like a friction-free everything exchange, where stocks, bonds, commodities, yield-bearing stablecoins, and more can be swapped in a single click and under a single roof. Now, if you enjoyed that video, don't forget to check out our latest one right over here. And if you're not subscribed to the channel yet, you can do that right over here. That's me for now. Thank you guys very much for watching, and I will see you again soon.